Is there such thing as a magic pill for trading success? Let me answer that with an analogy. Is protein the magic pill for working out? A lot of people actually believe so. A lot of people think that if they just add more protein to their diet, they'll gain muscle. But in reality, the protein itself is working. If you add 50 grams of protein to your diet every day, then you are getting more protein. But if you're not putting in the work and actually working out, then the results you see will be zero. In that same light, if you learn some magic pills, if you take the trading supplements I'm going to show you in this video, but you don't put in the work behind the scenes, then you will see absolutely no results from them. In this video, I'm going to share with you what I consider to be the few magic pills for trading success, but they do require work. But after you take these magic pills and adapt them to your trading, you will see good results as long as you put in the work on the back end. And also in this video, I'm going to share with you the analysis behind an awesome trade we had on the dollar yen that banked in a major amount of pips. I'm going to share with you exactly what I used in order to place that trade, the exact strategy I used, so that you can adapt that strategy to your own trading and start making some massive pips using this strategy as well and this form of technical analysis. I'm going to go ahead and let the intro and disclaimer roll. I'm excited about today's video. While I do, go ahead and click that subscribe button down below the video to the right hand side. Click that like button for me. Go ahead and follow us over on Instagram at The Trading Channel. And I'll see you after the intro and disclaimer. Talk in a second. Welcome back, traders. The first thing we're going to dive into is this dollar yen trade you see on your screen that banked in over 430 pips on the second position of this trade. And what I'm going to do is show you me entering the trade live and then show you everything behind the trade itself. I want to show you the technical analysis approach that I used. I want to show you the full reasoning behind placing the trade. And the reason I'm going to do that is because in the future, I want you to be able to point out situations like this in the market as well to help improve your trading. So first off, let's go ahead and take a look at me opening this trade live. I'll show you a very short clip of that. Then I'll come back and talk you through the exact analysis, the exact mindset I went through in order to actually place this trade. I'll see you right after this clip. Hey traders, I just opened up a position here going short on the dollar yen, which may be a surprise considering that this market has been on a rampage to the upside here lately, but we have run into a pretty major level of structure and it seems that this market is starting to consolidate. Because of that, I opened up two separate positions. Once my target gets hit on this first target, then I'm going to move the stop loss to break even and see if this market decides to keep pushing down and actually return to a normal price, because currently, again, it's been on a rampage up. That is giving me a sign that we could see a pretty big move down in this next pullback, which is what I am looking for here on the dollar yen. I'll explain a little bit more about that analysis and also give you a look into how this trade played out in just a second. I'll be right back with that and I will talk to you soon. So as you just saw in that short clip, we decided to go short here on the dollar yen after this large push up. And right now I want to talk to you about the reasoning behind doing so. Why was it that I picked this area to go short in here on the dollar yen when there's been so much buying pressure beforehand? Well, that buying pressure beforehand was actually one of the reasons. Before we jump into the analysis, let's check out what happened to the trade. It's pretty obvious. The market pushed down, hit first targets pretty easily, continued pushing down, and we ended up making in a little over 400 pips on the second part of that position. We had a really small stop loss because our stop loss was based on the hourly chart, so it put us at a 12-to-1 risk reward on this trade. This is one of those trades that only happens about once a year, and the reason is because this trade only exists, this type of trade, where you make a 12-to-1 risk reward, where you have this 400 pip move in a matter of a few days, only happens when your technical analysis approach lines up with a catalyst. The catalyst that pushed the market around, in this case, being the coronavirus, which gave us an opportunity. That big catalyst gave us an opportunity to make these huge gains in a short amount of time. You have to understand that doesn't always happen in the market. For the most part, the market's not moving on the dollar yen 400 pips in a matter of a few days. So it's impossible to make gains like this unless you have that lining up. Again, your technical analysis approach lining up with the news catalyst. But it's important to note, I would have placed this trade whether there was a news catalyst or not. I'm a completely technical trader. I do not pay attention to news whatsoever. That just helped in terms of making these bigger profits. Now, let's dive into the approach behind the trade so that you can understand how to bank big profits like this in your own trading once situations like this occur, and you'll know how to spot them a lot easier after I talk you through this. Now, the first thing you need to know is that every time I place a trade, I need to have an advantage over the market, a validated edge. If I don't have a validated advantage over the market, I do not place a trade. One of the magic pills, one of those magic pills to trading success is having an edge over the market. But the question becomes, because that's really hard for a lot of beginners to understand, have an advantage over the market that's validated. How do I do that? Well, a huge part of that, for me at least, is structure levels. So in this specific case, something that gave me an advantage over the dollar yen, something that gave me an edge, a better chance of making money than losing money, was one scenario being the fact that this market was extremely overbought. This market had so much buying pressure previously, coming from all the way down around 108.5 up to 112 virtually without hardly stopping at all. This was a very much so an overbought market. So with that being the case, while we were about right here with price action, I'm going to color this line orange. When we were about right here with price action, I looked left and asked myself, okay, with this being the case, price action being at my orange line, if I'm looking up from this orange line, where's the next level of resistance this market's going to hit, next level of major resistance? And it definitely was right here. The things I look for with major resistance to help me gain an advantage or an edge over the market, because no one knows exactly what the market's going to do. We have to give ourselves a higher probability of winning a trade than losing the trade. And I'm going to go through a lot about what it takes to do that towards the end of this video when I talk about the magic pills for trading success. But right now we're focusing on this dollar yen trade. So the factors that played a role in this trade was an extremely overbought market that we just took a look at over here. And knowing that that market was overbought, with that being the case, I knew traders were looking for a level to sell that position. No one wants to hold on to a trade forever. So anyone that was in this trade, in the dollar yen buy position coming up through here, was looking for a place to get out. What's the most logical place to get out? The most logical place to get out of that position would be the next major level of structure resistance. What also plays a role here is anyone that's a counter trend trader and looking to short this market is looking in this level to go short as well. So when you have that combination, it makes for a very nice trading edge, a very nice probability that you come out as winning the trade instead of losing it. So with those two factors being the technical factors, remember, the only way something this big actually happens is if those technical factors line up with a news-based catalyst, which they did in this instance. But again, strictly trading based on technicals, the targets were placed based on that news catalyst, but the entry itself was made strictly based on the technical analysis and knowing that this market was overbought based on the previous days of price action, combining that with a major level of structure. And when I say major, I mean extreme levels of structure, support, and resistance. Now, these extreme levels can be subjective for a newer trader or someone that doesn't really understand structure levels to understand where they are or what they are. With that being the case, I decided before making this video that I needed to make some rules for this. Because for me, I've been trading for going on a decade now. When I look at a chart, I can point out the extreme levels of structure within seconds. I can spot them simultaneously while looking at the chart. But for someone just starting out, for a newer trader, for someone that doesn't understand structure as well, I can see how it would be subjective and be a little bit harder to understand these major levels of structure. So let me share with you the rules for extreme structure levels. These are levels the market has started a new trend from. Extreme levels, I'll point them out for you on the chart right now, would be here, here, and here. Those are the three extreme levels on this chart. And at this point, now this would be as well, since we're breaking below these levels of structure. Another way that I found, and the rules that I'm going to use to share with you, is we're looking for levels that have not been touched looking left for 5 months, and after being hit and pushed down or up from, have not been touched for 5 months. So the extreme levels is the highest point in the past 5 months looking left and looking right, or the lowest point in the past 5 months looking left or 5 months looking right. And if you look here, you can see another example of this level working out in your favor if you chose to use it as a support level right here as it started to push the market up. And here, as the market came back to this level is the trade we just took recently here on the dollar yen. So how do we spot these extreme levels? We look at the level itself and we ask ourselves, while looking at this level, 5 months looking left, when's the last time it was touched? It was more than 5 months back at the beginning of 2019. 5 months or more looking right, has it been touched? The answer in this case would be no. So what do you think, just going not on hindsight, but on future price action, what do you think I'm going to be looking for out of the dollar yen? I'm going to be looking at this pair very closely if the dollar yen gets down to 104.81, because this is a level of structure that has not been touched in the past 5 months, and that also, looking left previously, wasn't touched for 5 months. This is my next extreme level on this specific currency pair. This is the next extreme level I'm looking at, or if we get back up here to this resistance level, that will be my extreme level as well. And I know you're like, oh, I gotta wait 5 months to see if this plays out, but if you look through charts, you're gonna find these levels and the market's gonna be hitting them well within 5 months. So you can take that information and it can help you provide, it can help to provide you with an edge over the market. That's one of the things I wanted to go over here on the dollar yen. In terms of entry, it was quite simple. In terms of entry, we were just looking at this market slowing down here on the hourly chart. We got up to this level and started to consolidate. And that showed me that this is going to be a resistance area. With the news catalyst, again, I didn't have any idea that this market was going to jump down like this. I decided to take my profits off on this trade because we ended up with a double bottom down here at a level of structure looking left. But I had no idea this was going to happen because I don't trade based on news. I was entering this strictly as a technical trader. But that ended up being what happened here on the dollar yen, and that's how you can provide yourself with an edge, is by using extreme levels of structure to trade around, and using extreme levels of structure as resistance and support out on the daily chart. You can take and test that yourself, and that brings me to my next point in this video, which is going to be explaining to you what I consider to be the magic pills for trading success. So what are these magic pills for trading success that if you take, study, and apply to your trading can really equal some good results in terms of improving your trading and helping you on your path to becoming profitable? Well, as we stated before, having an edge over the market is one of the first steps. I'm going to draw what I call the triangle to trading success. With these three things mastered, you will be in the center of this circle, which is all the profitable traders that are currently actually making money month after month instead of draining their account, which may be in a position that you're in right now, which is totally fine. I've been in that position where I was draining my account too at the beginning of my career, but this is the things that helped me get into the center of this triangle and become actually consistently profitable. One of them is your edge over the market. How do we create an edge over the market? We create that with a strategy or a system that every time you place a trade, you will have an edge. You will have an advantage versus losing the trade. You are more likely to win, or you're more likely to win more money than you lose. That's called risk reward. The other one would just be called your winning percentage. So you have to master strategy, and I'm going to teach you how to do that in just a second. These are the magic pills to trading success. So pretend this is a pill. We'll do it like this. There's our pill. That doesn't look like a pill at all. Bear with me here. I'm not great at drawing. I'm good at trading, terrible at art. Here we go. Next, you have to master the magic pill of risk management. Let's just draw another really shitty pill here. And next, you have to master the magic pill of discipline. So with these three magic pills, you can't fail at trading if you master all of these. It's impossible. And you cannot succeed at trading if you don't have these mastered. That is also impossible. That's why these three keys are so important. Now, in terms of a strategy or a system, what we talked about just now, I'm going to delete this, draw your own triangle of trading success, and put down what you need to do for each of these in order to accomplish your edge over the market or your strategy, in order to accomplish a good risk management plan, in order to accomplish discipline. Write down some goals and it'll really help. And I'm going to delete this for now though. So in terms of strategy, let's talk about that. A strategy is a combination of these technical analysis ideas that I've just shared with you, along with an entry reason, stops, and targets that provide you with an edge over the market. You can validate in historical data through a process called backtesting. So right now, let's create a strategy. We have initially what we're going to look at, which is the major or extreme, is like what I like to call these extreme levels of structure. So we have extreme levels of structure. as one of the conditions of our strategy that's going to give us an edge. So that magic pill is actually almost complete. After conditions, all you need is an entry reason, stops, and targets. What if your conditions in this case was that you look for these extreme, almost said major again, extreme levels of structure, and your entry reason is a color change candle. If the market hits an extreme level of resistance and puts in a red candle, then I enter on that red candle. My stop loss goes above the major level of resistance, and my target is a 2-to-1 risk reward. Could that be a full strategy? The answer is yes. Now, that's the protein. That's the supplement we were talking about earlier. That is the magic pill. But if you don't take and put in the work, right now you're taking protein. You're taking 50 grams of protein, but if you don't go work out, you're not going to gain any muscle. The version of working out that we're going to use right here is you have to take this and test it through historical data. That's called validation. You're going to validate that this has worked in the past. If it hasn't worked in the past, there's no reason to believe it will give you an edge in the future. But what you have right now is a set of rules that you can take and validate through historical data through the past to see if it provides an edge over the market, either by giving you a great risk reward, 2-to-1's pretty good risk reward, that gives you an edge over the market, or by giving you a really high winning percentage that gives you an edge over the market. Here at this support level, let's do another example of that strategy. We have an extreme support level, has not been tested for 5 months looking left, has not been tested for 5 months looking right. The market comes down to that level. We're waiting on a color change. If it's a support level, we would want to see a green candle after touching that level. With that being the case, our entry would be here, our stop would be below the entry candle or below the level of support, and our target would be a 2-to-1 risk reward. And we're doing this on a daily chart, guys. This type of analysis could apply to any chart. You don't have to wait 5 months. You can adapt this to your own trading. If you're a day trader, you may want to wait 5 days on a hourly chart or something like that, something along those lines. This isn't set in stone, has to be on the daily chart. Feel free to take and adapt this to your own trading. But as you can see, another winning scenario there. This is all you would do. These are set in stone rules, test them through historical data, see if it gives you an edge. Now, at this point, we have mastered the first step of becoming a profitable trader. You have an edge over the market if, in fact, that gives an edge. If what we just talked about gives an edge over the market. And it seems to. I've never tested that fully, but it seems like that would give an edge over the market to me. And I've tested thousands of strategies, I've probably tested hundreds of thousands of situations in terms of like each and every trade. I've probably tested hundreds of thousands of trades in the market. That seems like it would give a pretty good edge. So go try it out. Test 100 trades on a pair, with those being the rules you use to give you an edge over the market. Next, we have risk management. How are you going to master risk management? Well, mastering risk management comes down to plugging in all of these numbers into a spreadsheet once you have tested the strategy. You test the full strategy. The magic pill of risk management is plugging those numbers into a spreadsheet to see what your maximum drawdown could be, to see what your risk management plan needs to be. Mastering risk management is something that is so essential to trading success, because so many traders are out here trying to make as much money as fast as possible, and doing so will lead you down a path of blowing an account very quickly by risking 5 to 10% of your account per trade, or maybe your whole account per trade. That's not how you master risk management. That's how you blow an account. So mastering risk management, once finished, you'll probably be risking between 1 and 2% per trade. At least that's something I'm comfortable with. It's something you have to figure out what you're comfortable with. And then the final step, the final magic pill to trading success, is staying disciplined to that risk management plan and staying disciplined to that strategy, even through periods of drawdown, through periods where you're actually losing money. That is difficult. And you're going to go through periods of drawdown in your trading. That is inevitable, and there's no way to avoid it. The whole point, the whole reasoning behind risk management and behind discipline is that your risk management plan puts you in a position where you're not super stressed out. You're not, super emotional. Whenever you go through a drawdown, your risk management plan puts you in a position to be less emotional, which gives you the ability to be disciplined to the strategy, even though you're going through a drawdown. So that has been a little bit about the triangle of trading success and the magic pills to trading success. If you loved this information, if you really enjoy the way I teach and you really enjoy what we share here on YouTube, and you would also like me to mentor you through a step-by-step process of accomplishing all of these things, you can join me and your fellow traders. I'll put some of their testimonials on the screen in the EAP Training Program, where I have a full course walking you through step-by-step every step of the process of creating an edge over the market, every step of the process of creating a risk management plan, and keep you disciplined. The way we do that is through a full course that we offer in the EAP Training Program, showing you the strategies that I use each and every day. Then in terms of helping you with risk management, there's a whole course on risk management and how to determine your own risk tolerance. We also have 3 to 5 email alerts I send you each and every week, and we keep up with in a spreadsheet that I do review videos on every couple of weeks to show you me going in and out of drawdowns to help you stay more disciplined to your own trading plan as well. And with the EAP Training Program, you get priority email, where you can email me at any point with questions you have about the training or about Forex in general, and I get back to you extremely quickly, and I get back to you personally. This is a personal mentorship program, so if you'd like to join that, the link for the EAP Training Program is in the description. If you join now, we are also offering the Pro Trader Report for absolutely free with your induction into the EAP Training Program. So check that out in the description, labeled EAP, to learn more. If not, that's totally fine too. No big deal. Keep it locked here on our YouTube, where we're going to continue to provide you with free training that is extremely valuable each and every week. There will be a video beside my face somewhere that I think is extremely valuable to your trading and that I think you should check out right about now. Otherwise, I will see you in the next video. Follow us on Instagram at The Trading Channel. Make sure you're subscribed. Click that like button before you go. Trade green. I can't wait to talk to you soon. See ya.